Cryptocurrencies are evil, they have no fundamental value, and they are also Ponzi schemes. These are the arguments used by crypto haters to recommend investing into stocks as opposed to allocating your portfolio into crypto. In this video, I would like to discuss how today crypto could be a much better investment than stocks. And they are right. Look at this chart of Bitcoin. Bitcoin went up by 25,000% since 2014. The chart looks super heavy. Bitcoin is overvalued. Here's a little bit of a problem though. This is not the chart of Bitcoin. This is the chart of Nvidia. And here's the Bitcoin. When criticizing crypto, haters conveniently avoid the fact that the stocks, specifically in the tech sector, are significantly overvalued. For example, here are the PE ratios, price to earnings ratios, of the Magnificent Seven stocks: Apple, Microsoft, Alphabet, Google, Amazon, Nvidia, Tesla, and Meta. Very few people know what PE ratio really means. PE ratio is essentially the number of years it takes for a company to maintain the earnings in order to substantiate today's price. So the company is making X in earnings, and in case of Nvidia, for example, it will take 75 years to fundamentally substantiate the stocks given the earnings stay at the same level. The formula of P is very straightforward. It's price to earnings, but it looks much more obvious when we use E to P ratio, earnings to price. And doesn't this look pretty? The earnings to price ratio. In case of Nvidia, for example, we look at 1.3%. What does it mean? It means that when you purchase a stock of Nvidia today, you are paying a premium of 98.7%. So you assume that Nvidia will be around for the next 75 years. Now let me ask you a question. Do you remember what happened 20 years ago? Amazon was just starting out. Google was just starting out. There was no such thing as Facebook yet, just 20 years ago. How confident are you that 75 years from today, 40 years from today, these companies will not be subject to massive competition from crazy competitors that are not even on the horizon yet? And of course the haters say, so what? The stocks are overvalued. That's fine. But if you buy them, at least you will be able to have the fundamental value. Even if there's going to be a massive correction, you still have something fundamental behind it. The answer is very simple. If the fundamental value of stocks is 2 to 4%, and theoretically, throughout the severe recession, the stocks could drop by 96%, how is that better than crypto that, based on what haters say, could drop by 100%, yet could have massive potential, which is much higher relative to the stocks? So in case of crypto, fine. Let's assume it can drop down to zero. You lose 100% of the value in a negative scenario. But in a positive scenario, Bitcoin has been posting 75% per year gains. But in case of stocks, you can lose 96% in the negative scenario, and in the positive scenario, you can generate 10% per annum. This is amazing. Crypto haters also like to say how crypto is completely fugazi, it's virtual, it's unreal. But real companies are being run by real people that generate real revenues. Well, Andreessen Horowitz kind of disagrees. In another article by Fortune magazine, Andreessen Horowitz partner says Google is an amazing example of employing people in BS jobs, have the white-collar staff, probably does no real work. Last year, individuals told Fortune they had been talent-penned, hired by technology companies on six-figure salaries to do nothing except complete a 10-minute task every now and again. The sources Fortune spoke to said some hires used their weekdays to learn how to scuba dive, while managers told off the candidates for asking too many questions. It is unlikely that the Fed corporations will be out of business anytime soon. We are in the age of capitalism, which is called monopolism. So at this point of time, monopolies are extremely strong. However, monopolies are becoming more and more inefficient as they are losing the competitive advantage. And the decentralized spirit of many protocols, such as Bitcoin, Ethereum, could very easily fight with the corporate bullshitism that occurs in these corporations. So the efficiency of teams behind Bitcoin, Ethereum, and some other decentralized protocols could be much higher compared to the efficiency of workers who work for corporations. When you work for a Web3 company, you have a mission that you would like to bring to this world. When you work for a corporation, you're working for your 401k, which may not even exist by the time you retire. But wait a second, Cryptomaxi. Real companies solve real problems. And what type of problems do cryptocurrencies solve? Absolutely, iPhone was a great innovation. It changed so many people's lives, especially when you watch this TikTok recorded on an iPhone. That was game-changing. Let's face it, today's technology has lots of positives, but equal number of negatives. Internet, great invention, but how much traffic is directed to porn websites? Social media, how much time do you literally kill, watching YouTube Shorts or TikToks, including watching this video? What blockchain and crypto is trying to solve is trying to re-engineer the entire financial system so we are not subject to digital slavery that is more and more evident as a possibility. Ask yourself these questions. If blockchains are solving a much bigger problem, doesn't it make sense for blockchains to have a larger market capitalization as well? If you want to bridge from Web3 utopia to Web3 reality and reclaim your rights of privacy, financial autonomy, and ownership, join the Ghost ecosystem by visiting chain.ghostchain.io. You can find all the necessary links in the video description below.